Cryptocurrency is making everyone millionaires. It's such a hot topic, whether it's Bitcoin, Ethereum, or any other altcoins. Chances are you have made tons of money. Exactly 1 year ago, on October 15, 2020, the price of one Bitcoin was $11,300. Today, it is $57,500, a 507% return. If you had invested in something like Cardano, you would have made a staggering 2,100%. You probably feel like you're sitting on the clouds with all these gains. Unfortunately, no one is talking about taxes and how Uncle Sam, the IRS, will tax you on these gains. So let's go over all the scenarios where you have to pay taxes. The first scenario is pretty basic. It is when you sell your crypto for US dollars. This is when you're on Coinbase, Robinhood, or any other brokerage account, and you just sell your cryptocurrency. Let's take an example where you have $50. You use this to purchase a small piece of Bitcoin. A few weeks later, the value of Bitcoin goes up and you sell it for $100. This will be a taxable event. In tax terms, it's called a realized event. You now have $100. $50 was your purchase price or cost basis, and the other $50 is your profits. Fortunately, you will have to pay taxes on that $50 profit. The tax rate will depend on your holding period, whether it is short-term or long-term. It is short-term if you held the Bitcoin for under 1 year, and long-term if you held it for 1 year or longer. The tax rate would range and it depends on your income threshold. Generally, short-term rates would be between 0 to 37%, and long-term gets beneficial treatment as the tax rate is lower, which is 0 to 20%. Disclaimer is that these rates do not include state taxes or net investment income tax. The second scenario is when you exchange one coin for another. For example, let's say I kept the same Bitcoin which I bought for $50. A few months later, I exchanged the Bitcoin for Ethereum. This will also be a taxable event. If the market value of Ethereum was $200, your profits will be $150. You will have to pay taxes on the profit. Let's say you now hold Ethereum, and a few days later you exchanged it for Dogecoin. At the time, Dogecoin was worth $500. Let's calculate the profit on this transaction. Your purchase price or cost basis in Ethereum is $200. Your sales price is $500. Your profit is $300. So between these two transactions, you have to pay taxes on $450 profit. The third scenario is when you exchange crypto for a product or service. Let's say a few years ago you bought one Bitcoin for $15,000. Bitcoin is now worth $57,000. Tesla started to accept Bitcoin, and you buy a Tesla with Bitcoin. The Tesla was also worth $57,000, so it cost one full Bitcoin to buy the Tesla. Let's now calculate the gain. Your sales price is the value of the Tesla, which is $57,000. Your cost basis in the Bitcoin was $15,000, and your profit is $42,000. And that is all for this video. I hope you find this helpful. If you have any comments, please comment below, and if you like my content, please subscribe. Thank you so much for watching.